stock trading strategy. How an intelligent investor creates passive income, investing in the stock market using simple day trading strategies. Written by Mark Zone. Narrated by Alexander Penny.
Introduction. Congratulations on downloading Stock Trading Strategy. How an intelligent investor creates passive income, investing in the stock market using simple day trading strategies. And thank you for doing so. When it comes to not just getting by, but truly accruing real wealth, there are few more well-known but largely misunderstood ways of doing so than through proper manipulation of the stock market. Luckily, the following chapters will discuss everything you need in order to get started on the right foot as quickly as possible. First, you will learn all about the basics of the stock market to ensure you are well prepared to take full advantage of it when the time comes. Next, you will learn how to tell a good trade from a bad one, using both fundamental and technical analysis, as well as key consolidation chart patterns to know. From there, you will find plenty of strategies for success, regardless of the time frames you are comfortable working in. You will then learn the importance of diversification when it comes to the success of any long-term investments you make. Finally, you will find a variety of common mistakes that new traders make, as well as ways to easily avoid them once and for all. With so many choices out there when it comes to consuming this type of content, it is appreciated that you've chosen this one. Plenty of care and effort went into ensuring it contains as many interesting and useful tidbits as possible. Please enjoy. Chapter 1. Stock Market Basics. 1.1. What is a stock exactly? At its most basic, one share of stock is a representation of a partial claim to a given company's earnings and assets. The more shares of a company's stock that are available overall, the less each individual share is worth. The more shares of a company you own, the more control you have over the company in question. Stock can also be referred to as equity or shares as well. Those who own stock in a company are referred to as that company's shareholders, which means they each get a share of profits, known as dividends at predetermined periods throughout the year, and also, in some cases, voting rights based on the number of shares in a company that they hold. While originally each stock that you owned came with a physical piece of paper, indicating what you owned as well as how much, these days all of this information is stored electronically by the brokerage that you will ultimately choose to directly handle your transactions. While holding a physical copy of your shares is nice, it would also require you to take those documents to the brokerage you were using every time you wanted to make a trade. This process is referred to as the in-street name method of holding shares. While owning shares of a company does entitle you to a piece of their profits, it does not mean that you can have an active say in how the business is run, even if you own voting shares. At most, you are going to be able to vote for the board of director members at an annual shareholders meeting. During this meeting, you will be able to cast your vote, and it will be weighted based on the number of shares of the company's stock that you hold. The goal of this process is to provide shareholders a way of indicating their pleasure or displeasure with the overall way the company is being run. Unless you own a significant portion of the overall number of shares of a company, you really won't have much say in what they do. 1.2. Investing or trading. While many people assume that investing in stock is the same as trading stocks, the two have a number of key
Sample complete. Ready to continue?